is our managing editor Shireen Bhan in conversation with IKR Inca, a global head, speaking about a lot of trends as far as consumption, inflation and the impact on demand is concerned as well. But let's focus on our own markets now. Bank of India, Rima was mentioning how the stock is lower in trade today, and it is, of course, in focus. So let's discuss the earnings fine print because it was a robust NII growth for the company with best ever net interest margins in 31 quarters. So the stock, of course, has recovered, but of course, still under a lot of pressure. Let's discuss this with A.K. Das, the MD and CEO of the bank, joining us now to discuss this. Mr. Das, good afternoon. Thank you so much for joining us. Well, it has been a good quarter. Net interest margins at a 31-quarter high is what we are seeing. Do you expect the net interest margin momentum to continue? You had earlier said that it can be sustained at 3% plus levels. Are you continuing with that guidance?
Yes, very much. I am very optimistic that yes, there will be some amount of moderation post repricing of liabilities. Now that cycle is yet to get completed. So there will be some amount of moderation, but I'll be happy if it ranges between 3 to 3.25. As we know, 3% is the global benchmark. So I'm pretty confident that with higher, better yield, we can offset the rise in cost of deposits, if any, and above 3% is my take.
Okay, so 3 to 3.25% is the guidance on margins, and this is despite deposit rates going up and the repricing still continue. Sir, can you talk about this big increase that we've seen in your write-offs? There's a near 35% jump in your write-offs this quarter sequentially at 2,500 crore rupees. What led to that? Any guidance on the same?
See, basically write-off is a balance sheet management tool, and we go only for write-off where there are no recourses left. Most of the write-off was long pending NPAs in the overseas markets. So we thought it prudent to hive it off from our loan book. It's a cleansing exercise. But more than that, I should say, you would have noticed about 1,200 crore of slippages happened, but we could recover. Cash recovery and upgradation was to the tune of more than 1,800 crore. And slippage management continued to be our forte. Our slippage ratio as a percentage of standard advances was 0.27, probably, I believe, one of the lowest in the industry. So overall, I think recovery has been good. We targeted about 2,500 crore of recovery. That has happened. And obviously, the gross NP ratio has come down substantially to 7.66%. Our take is to take it below 7% at least by March 31st, 2023.
Okay. So your net assets and NPAs will come down below 7%. Sir, the RBI had pointed out some financial divergence, which required you, I think, to make additional provisions of 1,419 crore. Could you give us what happened over there and what is the way forward?
Yeah. As you can see in the P&L column, you would have seen there is an increase of standard asset provisioning. RBI had given us a 3-quarter dispensation starting with September up to March for providing for that 1,400 crore. So we provided 400, the first tranche in September.
Got it.
So although we had the time up to March, we decided to go for the entire provisioning in this December quarter only.
Okay.
That's how the number is looking a little elevated, but again it safeguards my March P&L.
Okay, understood.
Since we had adequate operating profit, we thought why not,
Okay, understood, Mr. Das. So you have made that provision in the December quarter itself, though you had time till March to do that. Can you tell us what are the resolutions expected in the NCLT? What is this segment looking like for you? Expecting more resolutions to come by in your books?
Yeah, if you see our 38,000 crore of NPA, gross NPA, out of that almost 34,000 are in, NCLT. And almost out of those 34,000 crore, 23,000 is for accounts where the resolution has been filed by other banks. The progress has not been very satisfactory, I must say. It's for all banks put together. But on a very conservative basis, at least 600 crore. There will be some upside to that because of some bigger accounts getting resolved in this quarter as per the reports. But at least 600 crore worth of resolution will happen, which can bring down our gross NPA by further 2,000 to 2,500 crore.
Okay, so 600 crores is what you're expecting in this quarter, or when you said you're expecting more resolutions to come by, it can actually be a bigger number than that?
Yeah, it can be a bigger number, yes.
Any ballpark that you're looking at, Mr. Das? Something that you might be, providing for or at least expecting to come by?
Now, one major ballpark I can tell you, this RBI mandate, what you told, the provisioning we have done on standard assets. I think by March, many of those assets will be completing 180 days. So if the account performs well, we can expect a significant number of write back there. So that will further strengthen my P&L. It's a big amount, and I'm sure by March, most of it should be written back. So that will give us further cushion to improve our PAT.
Okay. Your loan growth has been about 18-19% on a year-on-year basis. What's the guidance on the same? Can you sustain this near 20% loan growth for the next couple of quarters? What's the visibility that you have, the conversations that are ongoing with corporates?
Small correction, it's been 16% loan growth global, and domestic it has been about 12%. And in that, RAM segment has grown by 13%, corporate has grown by about 17%, driven by select segments like metals, chemicals, textiles, construction, and power distribution and transmission. I consider, since it is 12% only, I will stick to the 12% growth number. Of course, with a caveat that compared to September, where the availment was only about 64% in ODCC accounts, that has improved to 69% by December. We have spent a lot of efforts in that, reaching out to customers and understanding their issues and all. So that number has come, but on a very conservative basis, which will have a 1% to 2 percentage point upside. I think minimum 12% credit growth is what we are aiming at for March.
Okay, so 12% growth is what you are aiming for. Last question before we let you go, Mr. Das. Can you just tell us and give us a sense of what the business momentum is looking like across categories? And do you have any fundraising plans currently?
Yeah, we recently raised about 1,500 crore of AT1, and there was a lot of interest shown. And with backed by good Q3 numbers, in fact last 12 quarters we have been earning profits and good improvement in profitability. We are planning to hit the market with a QIP issue very soon, where we are aiming for about 1,500 crore. And to that, if I add my return earnings of about 3,500 crore conservatively, I think my capital adequacy ratio will be definitely in excess of 18% by March 23. That should give us good credit appetite to pick up other assets also. So all in all, I think our CRAR and our CET1 is in a very strong footing.
Okay, so very quickly, your deposit growth is quite low. Could you tell us the reason for that? Are you taking steps to improve your deposit growth? Because ultimately, it's the deposits that you garner which will feed into the loans that you will have to give to corporates.
Yes, I agree with you. Deposit growth has been very muted, and not only for our bank, for many banks it has been muted because of the liquidity position prevailing in the system as a whole, post-COVID in particular. But one silver lining is there. Our CASA franchise has remained robust as ever before. If you can see, our CASA percentage is about 45.5%, which is one of the best in the industry, I should say. Retail term deposit, yes, there have been few concerns. So we have been doing mid-course correction in giving, rate increases to attract new customers. But I believe interest rate is only one of the few variables that affects deposits. We are trying to reach out to other avenues like refinance and all. And with that, so far, so good. We are having a LCR of in excess of 130-140%. So that's not the biggest concern. But yes, deposits are under our radar. We will be monitoring the movement and going for mid-course correction wherever it is deemed necessary.
Okay, Mr. Das, thank you so much for joining us and explaining to us Q3 numbers and what the outlook going forward is. Of course, the deposit growth is something that we'll be tracking as well. We'll do one thing, we'll slip into a short break. As we do that, here's an important information for our viewers. Don't miss out the 19 must-have stocks for 2023. Subscribe to Money Control Pro to get the full list.